Namaste, welcome to Arthaniti. Today I'm going to touch upon a very basic topic in investing, benchmarking. Yes, the word that is very commonly used, but I doubt many of us know about it. So I am going to today attempt in simple words to explain what benchmarking basically is. Now, see, in our school days, when we used to give exams and the results that we received later on, uh, or there used to be a ranking system, or there used to be a grading system, A, B, C, D, A plus or A star. Those were the grades. Now, depending on the percentage that you procure in your exams, you would be categorized in different grades. Looking at those grades, a third person who would understand how you have performed in your exams, right? Benchmarking is basically such grading. See, in simpler terms, what benchmarking is, it is basically comparing the results of your investment with a benchmark in that particular field of investment. Now, today we will talk about benchmarking in mutual funds. Now, there are various kinds of mutual funds. If you are planning to invest in, say, an equity fund, what would you think the benchmark would be? Well, for an equity fund which has majority of investments in the stock market, the benchmark would very obviously be the BSE SENSEX or the NSE NIFTY. Now, if you are planning to invest in, say, sectoral equity funds, like, say, a banking fund or an auto fund which is concentrated towards the auto industries, then you would have to benchmark the performance of that particular fund with the auto index of one of the stock exchanges, or the banking nifty or bank index of these stock exchanges, depending on the kind of fund that you wish to invest your money in. Right now, for debt mutual funds, what happens basically is, debt mutual funds do not invest your money in stock markets, they invest your money in debt instruments. The basic criteria or the benchmark that is normally used for debt mutual fund schemes is MIBOR. MIBOR stands for Mumbai Interbank Borrowing Rate. Now, this basically is the rate charged by one bank to another for the loan that the first bank has given for a very short term basis to the second bank. So this is basically when one bank gives loan to the other bank for a short period of time, the interest rate charged by the bank is called MIBOR. So for debt mutual funds, that is basically a benchmark that is used. For gilt funds, there are three benchmarks depending on the duration for which you have invested your funds for. Now, up to 3 years, there is SIBEX, for short term, up to 3 years, the benchmark that is used is SIBEX. For medium term, the benchmark that is used is MIBEX. And for long term, above 5 years, the benchmark is LIBEX. Right now, coming to gold funds. Now, gold ETFs basically are funds which invest in gold and gold manufacturing companies. Now, how do you benchmark them? See, basically, gold in India, gold is an international commodity. Now, in India, when gold prices are set, they are based on the prices in the international market. Plus, take into consideration the exchange rate variations of the foreign currency in which in which the prices are set in international market. Add to it the duties that are charged for import of gold in the country, and you get gold prices in India. So for any gold funds, gold ETFs, the gold prices in India, which are dependent on international prices, are taken as benchmark. So basically, depending on the kind of funds that you wish to put your money in, you need to find the benchmark wherein you can compare the results of the fund that you want to invest your money and the benchmark related to that particular sector where the money is getting invested. Now, what happens because of benchmarking is you get a picture on the performance of the fund where you want to put your money. Correct? Whether the fund has outperformed or underperformed that benchmark, obviously you should target funds which have either matched the returns on the benchmark or outperformed the benchmark figure, correct? Because like that is a easier way of decision making where to invest your money. It helps you decide on the right kind of fund. Because telling you frankly, there are more than 2500 mutual fund schemes in India by various mutual fund houses, and most of the schemes uh, have the same philosophy, or invest in say equities or debt, or you have hybrid funds or gold funds. Then how do you decipher, then how do you decide of these 2500 plus schemes that are available in the market, which scheme is suitable for my investment? Obviously your aim is not to lose your hard earned money, but to grow your money, correct? And how will you grow it? If that fund where you are planning to invest in, it outperforms or matches the benchmark. That is what that is how benchmarking helps you in deciding upon your investment. Very short video today. I hope you like this video. Please like and share my YouTube channel, and look out for my videos every day wherein I add, if not more, but a minuscule value to your investing journey. See you tomorrow in the next video. Thank you. Bye.